You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
But when I was on Kerry's show in January, I told him, I said, I got my first sell signal in this market to get bearish. I would be exiting all longs at this point in time, and the market should fall. My biggest fault was, I caught the downdraft. I just didn't stick in it as much as I should have, and I would have made a lot more money. But nonetheless, I made money, and I avoided the entire, long position move on the way.
You're tuned in to Mining Stock Education, and I am your host, Bill Powers. Well, on this show, we focus more on the fundamental value of companies, mostly in the resource sector, and we do talk about technical analysis as it relates primarily to the mining ETFs and the precious metals or whatever commodity we're talking about. But today I have on the line with me a professional trader, my good friend, Kerry Lutz over at the Financial Survival Network. He's been podcasting regarding precious metals and finance for over a decade, and he's been telling me, he said, Bill, one of the guests on my show, Nick Santiago, he's one of the best market timers that I know. You really need to get him on your show. So with the help of Kerry Lutz, I got in touch with Nick Santiago. Nick joins me today. Nick, thanks for coming on Mining Stock Education. Your website is InTheMoneyStocks.com. For my listeners, InTheMoneyStocks.com. So Nick, when you look at today's market, based on your experience as a trader, what does today's market remind you of?
Well, it reminds me a lot of, 2008. I mean, you have those kind of big whips, but it's not exactly the same situation as we had back then. But there's a lot of similarities. And what will happen is markets will follow certain patterns for a while, and then they'll break apart, and then they'll take over and follow a different set of patterns. And all those patterns represent is human emotion. And that's why I'm a technical analysis. That's why I use that method, because it basically just keeps me from getting swayed too much one way or the other. I'm just going to use the charts, and the charts will tell me exactly what I should do.
Did you foresee the coming collapse in the major indices as well as the collapse in the gold stocks?
Yes. So before the year even started, I put out a report to my traders what the year 2020 should look like. And I even told this to Kerry even beforehand, and I said, markets are going up. The 9-year of a decade is always a very, very bullish year, with the exception of one circumstance, and that's only happened twice in the past 100 years. But the 0-year of the decade, meaning 2020, 2010, 2000, is always a volatile year. That is a year where you always want to be careful. It's what we call a bear year. If you do get big advances, they usually come in the second half and more towards the latter part of the year, probably around end of third quarter or so. But when I already know that the 0-year is going to present volatility, and to be honest, I never thought we'd collapse this fast. I'd never in a million years thought we'd collapse this fast. But when I was on Kerry's show in January, I told him, I said, I got my first sell signal in this market to get bearish. I would be exiting all longs at this point in time, and the market should fall. My biggest fault was, I caught the downdraft. I just didn't stick in it as much as I should have, and I would have made a lot more money. But nonetheless, I made money, and I avoided the entire long position move on the way. So that's worked out pretty well, and we still should have volatility going forward. But you could see that we've already put in a minor low on the 23rd of March, and now we'll see if we get what we call a truncated low, which means a little higher low, and then we rally back up, which I think is very, very possible at this stage of the game. If we break through the lows, then we'll probably put in some type of bottom very shortly in the month of April.
With the sell-offs, how did you play the gold sector at all? Through the major ETFs or any particular companies?
Yeah, so I played it a couple of ways. I did it with call options, and then recently, just my latest trade in the gold market, and in fact, just full disclosure, I'm long gold miners right now. I got long gold miners again on yesterday via the GDX. But the last time I played gold, I got in on the 16th and I was out on the 17th, and I took a 14.3% gain, and that's using a first position and a second half closeout position. So I played it pretty well. Going forward, I've been trading gold forever, and now I really just trade it via the GLD or the GDX, just because it's easy to move in and out, so liquid. But right now I'm long gold miners as we speak.
And are you using call options just on those ETFs, or do you do a call option on like a Barrick or one of the major miners?
Yeah, sometimes I'll do the individual names. This time around, I just own the GDX outright. I have not done it via the options market, but very, very often I will do it that way as well. Some of my favorite gold mining names to trade is Agnico Eagle, Newmont Mining. Those are the two that I probably trade most often. I have been trading Kirkland Lake Gold a little bit last year, but really it's usually Agnico Eagle and Newmont Mining. Those are my two go-to stocks when I do trade that group.
So, Nick, when you trade those particular companies, do you do a fundamental analysis of those stocks, or do you simply just look at the charts, see the volume, the liquidity, and the trends before you decide to play those names?
Yeah, I'm completely technical. I can't even tell you how much gold they produce. I don't know their earnings per share. I know nothing about them. I just completely look at the chart. And by doing that, that just tells me if the money is flowing into those names. And if I see a good pattern there, I go with it. And right now, I'm very tempted to even get in on Newmont Mining as we speak at the moment on the long side.
We'll be right back after this word from our sponsor. Arcana Corporation is on the verge of bringing the world's highest grade silver mine into production. The Revenue Virginius mine in Colorado has proven improbable silver reserves grading nearly 37 ounces per ton silver, with an all-in sustaining production cost of only US $8 per ounce of silver. The mine is fully permitted with infrastructure already in place, and the company has announced they plan to commence production in 2020. Achieving successful production usually results in a significant upward share price re-rating on the Lassonde curve. Arcana trades under the ticker AUN in Toronto and AUNFF in New York. To learn more, go to arcana.com. That's AURCANA.com. Nick, how did you experience your first taste of success in trading? And I'll share a little story. As a small business owner, I met a customer about a decade ago, and he was an immigrant to America from Colombia, and he was just working a factory job or something like that. It could have been the post office. I don't exactly recall. But when I was dealing with him through my business, he had his computer screen up and he had a bunch of charts and he was studying the charts. And so I began to chat with him about that. And just as an average laborer, he saved about $1,500 and then began to study and trade Forex. And he turned that $1,500 into about 1.2 million, if I recall. It could have been 1.5, but it was over $1 million. Paid off his mortgage, which was like $200,000 or $300,000 at the time, and then he subsequently lost it all. So I know that there is, through trading, not just fundamental investing, which is more of what I do, but there is this great profit potential. Can you share with us how, your first taste of success at trading?
Yeah, I'll share the story. I love telling it too. I was 19 years old. Turning 20, and I had a tumor in my chest, and I went to the doctor, and he said, "Hey, we're going to have to do a biopsy on this." And while he was in the office, he saw me reading a Wall Street Journal that I had brought with me, and I was reading the journal, and he came over and he said, "So you're into trading?" I was like, "Well, I don't really do any of it, but I'd like to get into it. I'm very interested in getting into it." And he said, "Hey, I got a tip for you." And the old tip gave me this biotech company that he uses that gives lab results, and they were going to come out with the first HIV over-the-counter test. And he said, if you have any money, I'd put it right into this stock right now. The next couple of months, this thing's going to fly. And I didn't even have an account. What I had was a buddy with an account, and I had a couple $1,000, and I went to him and I said, "Hey, this doctor just gave me this great tip on this little company, and they're going to create the first over-the-counter AIDS test." Well, I bought the stock. It was about $2 a share. I wound up making $10,000 on that trade out of my measly $1,800 or $1,500, whatever I put in there. And I was just the most elated person in the world. So I made $10,000 inside of 6 months. I thought it was the greatest thing, and I was hooked. I like your friend there that made the $1 million. I didn't make that. I gave back that $10,000 inside of 6 months. So that just got me hooked. Later on, I became a stockbroker for many years. And I didn't like that business. It was more of a selling business. And I just started to really gravitate towards the trading end of it. What makes these stocks move? What makes, oil move? What makes, gold move? Why are these things moving? And that was it. I just started to discover different things using the charts. And I really never look back. I can't even tell you what an earnings per share of any company is. I just really look at charts.
Nick, I speculate in mining stocks. So when I talk mining stocks with some of my friends that are finance-minded, I've gotten the objection, well, Bill, is what you're doing any different than gambling? So I pose this question to you. How is what you do different than gambling at the casino?
So the difference is when a gambler goes to a casino, he really doesn't have the odds in his favor. When I go into a trade, I have the odds in my favor every single time, or else I don't take the trade. I run a trading room, I run a business, and I'll have guys come to me say they want to get into XYZ. Will you do it? And I say, no, I won't get in that. And they'll say to me, why? I said, that's not a setup on the charts. You got to remember, the charts are basically a footprint of human nature, and these footprints keep repeating themselves over and over. So when you learn these patterns, you learn these moves that the charts are telling you, that's just putting the odds in your favor. Not to say that I can't be wrong on a trade. I'm in the GDX now. Not to say that I can't lose money on that trade. Maybe I do. But right now, I know the odds are in my favor that should go in a direction I'm looking for it to go. And that's the difference. You're putting the odds in your favor. I could say safely every trade I take, I'm probably 70-80% I'm going to make money on that.
You're trading against a lot of computers with the algorithms. Do you feel like you can beat the algos?
Yeah, in fact, I go right along with the algos. I hope they never shut them down. I hope they never get rid of high-frequency trading. I love that. I watch the chart, I see how it's setting up, and then I actually very, very often, through the system I created called time counts, I can actually tell when the algos are going to hit the market with a buy program or a sell program. So I'm very much in favor of the algos. I like it. I think they provide good liquidity for everybody. High-frequency traders provide it as well. So I don't want to see the algos go away anytime soon.
Regarding sectors, you mentioned that you're long right now, the gold sector via the ETFs. Any other sectors that might be a good swing trade that you could lift up for my audience? Yeah,
so right now, another trade that I just entered recently was Walmart. I just got into that position on the 26th of March, and I entered it around 108. Right now, it's around 114, but I still foresee that going to around 119 to 120. So that's an area where I like. Another area where I think traders can also get involved in is the pharmaceutical names when they fall. So today we got a pretty good decline in the market to start the day. I'm going to be watching Pfizer today. That's one that's on my radar. Bristol Myers could be on my radar very shortly after a pullback, but that pattern still has not given me what I like to call a completion. And what I mean by a completion is it gives me the setup, and then I enter the trade. So that's still in the early stages of potentially setting up. I think traders right now can look at any good high-quality names to get involved in on pullbacks. Microsoft would be one. That's been a stock that's held up very, very well in this kind of environment. It never really breached its it never breached its lows from 2019. That's always a good sign. It's had a good bounce. So that could be bought on a pullback of some sort. But again, you want to see these patterns crystallize. And how you do that is you wait for these setups, you wait for these patterns to line up, and then you enter them. But those are just some names that are on my radar going forward.
Would you be long the Dow and S&P right now?
I think you can be. Because you have a tradable bottom in place. So if you're looking at, say, the Dow, you could use the diamonds, the DIA. It's a little bit of a tight stop, but if you put if you do it via call options, even though the premiums are a little bit high right now, I do think that we got one more leg up in the Dow, but it's going to be a choppy year. So again, even if you miss a move, you're going to get another shot to own it again lower. This is not, the end-all, be-all. There's going to be a volatile year throughout 2020.
Nick, I've had recent guests on this show, and albeit they come more from a fundamental standpoint, but they said this is a professional trader's market, but the average person should not be trading this volatility. Would you agree with that? And when you see this volatility, does that get you excited, or does that cause you to really pay more attention to your trades?
Well, I'm always looking at the screen. I probably put in 10 to 12 hours a day in front of my screen. So it doesn't matter to me if we have the volatility or not. I'm always going to be babysitting and monitoring the markets. But it is a professional trader's market right now. If you don't know what you're doing, you may as well take the Warren Buffett approach and just buy and hold for 20 years. I mean, that's what you see on TV right now. 2 months ago, everybody was an expert. Now everybody's a long-term trader, a long-term investor. So, for me, the game hasn't changed. It's sped up a little bit with the amount of big moves in both directions, but it's still the same. It's still the same deal for me. It's just about looking at the charts. I prefer it like this. I like it like this because the moves are bigger, they're faster, they're more dramatic, and that's what I like to do. So for me, nothing has really changed for me. But I've been doing this now for almost, since my first trade. You're going back almost 30 years now. So I've been in this business quite a long time. I've seen a lot, not everything, but I've studied bear markets. And I have lots of techniques up my sleeve that I've been using with high degree of success for many years.
Your first successful trade was with that company you mentioned that came up with that AIDS test. There's been talk of companies that are trying to develop tests for COVID-19. Are there any plays around this crisis with the virus that we're seeing that you could share?
Sure. So Abbott Labs just came out with a 5-minute test. I think they're going to be releasing it this week. So it's going to be a 5-minute COVID-19 test to see if you're positive or negative. That stock's had a big run, but that's worth keeping an eye on. Another one I'm looking at is HSIC, which is Henry Schein. They came out with a 15-minute test, and that chart now, if you look at the daily, had a big spike on the news. Now it's pulling back. I'm getting interested in that pattern as well. So that's one where I may look to enter within the next week or so.
Interesting. And what does In the Money Stocks offer for my listeners? You're talking to a lot of mining speculators. How would your services help us?
Yeah. So, if you just came over to our blog, we do a lot of posting there. We put a lot of free content up there. I put a lot of free trades up there, too, that I do. And then in my educational area, I have lots of seminars that I've conducted. We have them all recorded now, and traders can go there and take those seminars on demand, and they can learn all the methods that I do. There's nothing that I do that I don't teach anybody that wants to learn it. I do have a few mathematical calculations that I've been able to create over the years that I don't share with anybody. But outside of that, I basically show everybody what I do and how they can do the same thing. So it's just a matter of learning. It's a matter of getting educated. It's just a matter of putting in the time. This is not something that you can master in 3 weeks or 6 weeks. It's so funny. My next door neighbor is a doctor, and one time he tells me, I'm going to get into that trading thing like you do. And I said, well, let me ask you, how long did it take you before you opened your own practice? And he was like, it took 13 years. I said, so what makes you think you could just come in and do what I do in 5 minutes? So it's all relative. You have to put in the time. You have to put in the work. How much time and how much work you put in, that determines about how good you're going to get and how quick. So everybody's got a different learning curve, but I put out all the information that you need to get going and to not only get started, but to succeed. And usually most people that try it out and stick with it, they do really become successful. There are people that just don't have it, and that's okay. Not everybody's cut out for this business.
You've been listening to Nick Santiago, professional trader with over 30 years experience. His website, again, is InTheMoneyStocks.com. Nick, thanks for coming on Mining Stock Education today.
Thank you, Bill.